the president were right after your Fed yesterday. What do you make of it, Mike?
Well, it is. It looks like a Donald Trump excuse. You know, he has equated the stock market with the economy and his own successes. So if the stock market goes down, it has to be somebody's fault, and the Fed makes a convenient whipping boy, and it deflects. But it doesn't mean that he's actually going to fire Jay Powell. There's a lot of question about whether he can even do that. You look at the Federal Reserve Act, and the relevant section suggests that each member of the Board of Governors is appointed to a 14-year term unless sooner removed for cause by the president. Now, that's the only line about this, and nobody knows what cause actually means in other cases. And of course, you're the lawyer. It's been interpreted to mean, I guess, inefficiency, neglect of duty, or malfeasance. And raising interest rates probably doesn't fall into any of those categories.
Listen, I don't think it's ever been litigated, so we don't know. But in general, in business, when you have a for clause in your employment contract, it's not because your boss disagrees with you. That's not the reason. It's got to be you did something wrong. You did something bad.
Right. And the thing is this refers to Powell's term as a governor, not as Fed chair. There's nothing in the statute about Fed chair, so that would be something that would go to the courts as well. But I suppose that if this even came to that, the jury would actually be Mark's people. It's going to be the markets because they would just go crazy.
Yeah. So let me just play devil's advocate. Is there something to what President Trump is saying? If you come inside the Bloomberg here, you're looking at the white line is trailing earnings, right? So that's obviously moving much higher. But then the blue line is trailing sales per share, which means that sales are not moving up as much. So basically, there is some margin gain that these guys are having despite slowing sales. Why would you want to be raising rates when you want to be picking up sales when inflation's still kind of right around that too?
Well, I think the practical matter is that we have a employment part. The employment part of the market is robust. It's very difficult. You're going to see some of these companies have difficulty going forward with higher expenses because of that. Mm-hmm. And you could make the argument that it is for companies specifically that it's an issue, but the economy is doing really well, and to figure out how to make sure that it doesn't overheat, the raising of the rates, I think, is the right way to go.